Okay, so let's talk about loans. The good, the not so bad, and the ugly. Some students are going to need loans to help cover the cost of attendance at college. We encourage you to find schools that are affordable and that offer great financial aid. Scholarships are also a great way to pay for your education. So be sure to do research and talk to your outreach counselor about colleges with strong financial aid at the beginning of your application process. So most of the time, student loans are going to be included in the financial aid packages from four-year colleges that students apply to. So if you find yourself in a position where you need to take out student loans, you want to think about how much you'll be borrowing over your education. It would be reasonable to have a loan amount comparable to the cost of an affordable car after you leave college, but you don't want to be taking out a loan balance that is like the cost of a house. So just keep that in mind as you move along in this process. So based on your financial need determined by the FAFSA, you may be eligible for federal student loans. These are often the very best option. First, there's the direct subsidized loans, which have the best interest rate and do not accrue any interest until 6 months after college graduation. So you won't owe any more than you borrow until that point. For 2020 to 2021, the fixed interest rate is set at 2.75%. The next option is going to be direct unsubsidized loans, and they do begin accruing interest when you take them out, but the fixed interest rates on these federal loans are reasonably low. In 2020, you're looking at 4.3%. And there's also a limit on how much a financial aid office can offer you in loans. So that first year of college, it's going to be a loan cap of $5,500 in federal loans if you are a dependent student. So most of the time, students are offered $3,500 in subsidized loans and $2,000 in unsubsidized loans their first year. That's what we typically see with a student that has high financial need. There are also Parent Plus loans that are available through federal financial aid. If a parent qualifies for that based on financial need, the 2020 to 2021 interest rate on those is 5.3%. And then there's this other category of loans. Schools like Chapel Hill have their own institutional loans that they offer through financial aid, and they have very reasonable interest rates. So the next question is, well, what do you do if that's not enough, right? When you still have a gap after your federal loans and you can't quite afford what's left. So you've got a few options. First option that I would advise you to consider is a more affordable college for you and your family. There are some wonderful affordable options out there, and there are colleges that just do an amazing job meeting financial need. There are some that even meet 100% of your demonstrated need without loans. And then, of course, you want to continue applying for scholarships. We know of some really great ones and can help point you in the right direction. Your school counselor might be another really good resource on local scholarships. And then there are some families that choose to take out things like a home equity line of credit or a personal loan from a bank or their credit union. That does typically come with a slightly higher interest rate or can be more complex, but there are families that choose to do that. The biggest thing is that we encourage everybody just to be really cautious when you're looking at those kinds of private loans and really think about the interest rate and what that's going to mean for you over time. Some of the private loans can have very high interest rates, and they can just put a significant financial burden on students and families. Most importantly, though, we want to remind you that we are here to help you in this process. So be sure to reach out to us with any questions that you have, and we can help guide you and help give you information to make the best decision for you and your family.